Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the December 23rd, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. Let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, and of course in our Tiger's Den, like Rupert's put in here, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got all the indices pointing green. Everything's trading up. The Dow's up 244, the S&P 21, the NASDAQ 100 up 9, the Russell 17, the semi's up 1 point. New York Stock Exchange is up 8.9%, 126 points out there. Spot volatility index below its 50-day exponential moving average. That is a recipe for a market that moves sideways to higher, the S&P 500, that is. Gold's up $7. Silver, 33 pennies. Light sweet crude up $1.18. Leading the charge dollar-wise, the upside, it is Booking Holdings, $56, nearly 3%. Humana up 17, almost 5%. Farming Group up 150, maybe it's an IPO. Protolabs up 14 or 7%. BlackRock is up nearly 2% or $13. It's Mercado Libre, that's the leader dollar-wise to the downside, $52. Shopify up 50, the Trade Desk 32, Zoom down 22, Carvana up 21, that's 7.5%. Okay, let's go take a look at what do we have here. We've got Mozam. Oh, Mozam in the United Kingdom. Let's go out to Mozam. Thanks for calling. How are you today? And thank you for the email.
Thank you very much, Steve. I'm fine. How are you?
I'm very good. And Fire Eye, still on fire out there. So tell me how I can help you.
Okay, so far your intuition, when I spoke with you on Tuesday, spot on. So we hit the 23.7 area and surpassed it. And given that it's a short trading week, so around here, what does your intuition say, whether it's time to hold or fold?
So I think what we'll do is a couple different things. First, I don't see a topping signal just yet. This is day 6 of a TD9 count. So Mozam, that says that this may go on to form a TD9 count pattern. And if that's the case, you're looking at 3 to 4 more trading sessions. So Thursday, and then you've got Monday, Tuesday, Wednesday of next week. That's the daily time frame signal. Weekly time frame signal, I think we were looking at an A to B equals CD pattern. Was that what we were looking at yesterday? When we looked at it, was it yesterday or the day before? Do you recall?
The day before, Tuesday.
Yeah. Okay. So we'll go put that back in here. The monthly time frame is suggesting that this wants to eventually trade up to 45.71. I'm just going to look at a short-term time frame, which for me right now I would say would be the 30-minute time frame, just to see if there's any kind of signals out here. And there really isn't, other than maybe this is going to pull back to 23.69. What I would be looking for I'm just going to pull this back a tad farther. Okay. So what I would be looking for to suggest that there could be a change in trend, and that would be a break of support. So when a market is moving higher, when it does pull back, what it tends to do is pull back to where it had broken out from. That's the real test. So Mozambique, the way that we take a look at, the way that I take a look at a breakout area is utilizing that TD9 count pattern. And in this case, that breakout level is $21.85. If price closed below $21.85, that could be an early signal of a change in trend. If you don't see price break through that level, then I would say that the bullish patterns remain in play out here. Now, I'm putting this on an ultra short-term time frame. This is a 15-minute, which does have a TD9 count pattern and a Rhodes momentum indicator topping pattern. And price right now is testing the bottom of its support level, 24.21. So even though I'm getting granular for you here, this will help you because even on a shorter-term time frame, the same rules apply, different numbers because of different patterns. And here, if you were to see price close below 24.21, it's signaling to you that price is likely headed back to 22.10. So I just want to be able to prepare you for that. But on the daily time frame chart, there is no signal. So that's all the intraday, the noise stuff out there. I would focus on that TD9 breakout level. But back to the game here with regard to price projection areas, it's an A to B equals CD pattern that we're using at this stage here to estimate where price is likely targeting next. So as we put this A to B equals CD pattern in here, you can see that it's past the 1 to 1.272 area. That was 23.37. The next target becomes 26.40. So I say you stay with this trade out there. If price closes below that 30-minute breakout level, well, then you've got something to think about. Or perhaps, and what I mean by that is potentially take some action. Okay?
Okay, perfect. Thank you very much, Steve.
You bet, and best of luck on this trade. But it looked like, at this stage here, it says you should stay. Okay?
Okay, excellent. Thank you.
You bet. Have a happy holiday, and we'll talk to you soon. We had a request from Inside the Tiger's Den from Ruby to take a look at natural gas. So let's go do that. That way I don't forget. And then we'll go back to Mark. Oh, I'm sorry. We've got a caller on the line, and we have call ahead seating, but I don't know who the caller is. Okay, so let me just ask. Who's on the line?
Hi, Steve. It's Scott from Colorado Springs.
Hey, Scott. How are you?
Good. How are you?
Very good, thank you. And what is it that you called to take a look at?
Nothing. I simply called to tell you that I use this time of year to look at what I'm thankful for, and I'm thankful for you, Steve.
Wow.
You have made such a difference in my life. I thank you so much for it.
Do we just lose?
I just wanted you to know that, and I wanted to know everybody that you touch, I want them to hear it. If they study what you do and stick with their risk management rules, they're guaranteed to make money.
You know, Scott, that is the best gift that you could give anyone, a compliment like that. I really appreciate that, and you're now in the will.
No, I just.
We're going to a hard break here. We're going to a hard break. Stay on.
I really wanted you to hear it.
Stay on through the break. Stay on through.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. The Dow's up 263. The S&P is up 21. We're on the line with Scott in Colorado Springs. Scott, I wanted to just make sure, Scott, you still on the line?
Yes. Sorry, I didn't hear the commercial.
Good. So we couldn't let that call end like it did going into that hard break. But and most importantly, and the reason is, and I really do appreciate the compliment, but the fact of the matter is the compliment really goes to you. And the reason that it goes to you, and I think I can speak on behalf of myself. I know I can do that, but I can speak on behalf of Tommy Jr., David, Basil, and Larry. And each of us years ago fell in love with this Rubik's Cube of a market out here. And each of us went on our own path to try to find some tools so that we could help ourselves and help others understand what the markets are doing. And each of us offer some different elements here. And the mere fact that you're taking that information and you're applying it and that you're using it and that you're taking action and decisions, really, it's you are the one that deserves the compliment. I appreciate that you have taken my stuff to that level that assists you, but it's really about you taking that action. So I wanted to pay a compliment back to you.
Well, thank you. And back a couple of years ago, you always told people to take massive action. And
that's
yes,
true.
It is a major part on the individual's part to put what you teach into practice.
Yep, absolutely.
And my thanks to you is that you took the time to get with TFNN, and I pretty much learned right along with you.
Yes.
I was step by step with you as you progressed. And
well, the good news is
not near as good as you are, but I took what you taught me and I've applied it. And like I said, if a person sticks to their risk management rules, they're
yes.
guaranteed to make money.
Yeah. Yes.
I mean, that 9 count in the OUL, I mean, I haven't, looked for other things, but I don't need anything else.
Yeah, well, that's terrific. That's great. And Scott, you've made my day, you've made my week, and I think you made my 2020. So thank you very much. Happy holidays to you and your family, and look forward to speaking to you again soon.
Merry Christmas, Steve.
You bet.
Have a great holiday.
You bet. Merry Christmas to you. With Scott in Colorado Springs. Ruby wanted to take a look at natural gas, so let's go do that out here. We've got natural gas that is in the process, I believe, of flipping from January over into February out here. So, Ruby, I don't know which contract. Are you trading the actual contract or what you're looking for out here? But when we put up these charts on the screen, you're going to see both the January, well, you're going to see January, February, March, and April contracts out here. So you've gotten the pullback. Now, Scott talked about, let me find natural gas out here. Scott talked about that TD9 count pattern. It's a beautiful pattern. We've talked about it, I think, already a couple of times. Where did that go? Okay, here we go. So what we're going to look at is the daily time frame. So here is, give me a second to flip to it. Let's get this loaded. And yesterday was bar number 8 of a TD9 count. Now, oftentimes, what happens is that can identify a top. It can identify a bottom. It may just be a hiccup or sideways move. In this case here, it's been a top. Now, when you get a topping pattern, remember, the only thing that sellers have been given the right to do is push price back to support. You and I never know. At least I haven't figured out the way to know. I know we can go take a look at volume, and I've done that. But even though you're moving lower into support with volume, it doesn't mean you're going to bust through that level out there. In any event, if you take a look at natural gas here, Ruby, this is January, you'll see that prices pulled back to test 2 areas of support. The first one is the top of the profile. The second one is the oscillator unchanged line. If this area holds, this area being $2.57 on the January contract, then this may just be setting up an A to B equals CD to the upside. That's what the daily time frame chart is telling us. If we look to the 30-minute time frame chart and we're looking for some type of bottoming pattern, well, we don't have it. So we don't have a short-term signal on a 30-minute time frame chart. So that whether support is going to hold or not, what you like to see is when price is moving back to a level of support, in this case here on the daily time frame, what you like to see if that's going to hold is you like to see some kind of bottoming signal. We don't have it on the 15, on the 30. We do have one on the 60, a potential pattern on the 60, and that's the TD9 count pattern. So with regard to what's this mean? How do you trade this, Ruby? Here's the beautiful thing. On the 60-minute time frame, because 65 minutes is what I should say, because we have the TD9 count, if there's a close below today's low, which is $2.56, that's going to suggest a strong momentum move back to where? All the way back to potentially the lows of December 10th out there. So that's what I would be looking at if you're trading the January natural gas contract. As I pull up the other charts out here, although these are the black background charts, you're going to see similar, I'm assuming, which is not a great thing, but I'm going to assume at this stage here, the same pattern is unfolding in the February contract. At least what we can see here, its price is tested and held the top of that daily profile. So that's what we see when we take a look at natural gas. I hope that helps you out. Let's go to our next caller, and this is Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you?
Steve, I'm doing great, and I'd also like to thank you for 2 of the greatest things that you taught me, and that is learning the bullish and bearish candlesticks, the ones that are most important.
Excellent.
And also the Rhodes Momentum Indicator. Those are the 2 things that I learned from you that have really, really helped me a lot and helped me to get a lot more successful trades. But what I was calling about today is if you could give us, in your opinion, with what you see happening now, what sectors do you think will really take off in 2021? And what's your longer-term view from what you see now about the markets? I know you talked about if we have a lower close at the end of the month, it could have set up a big, top in the markets. But I'd just like your opinion on that.
So here's I give you what we currently. Let's just kind of work backwards here. So this is the annual chart for the Dow, and folks, I'm really using the Dow, even though it's just 30 stocks. I'm using the Dow to help us answer that question. And on a yearly basis, what Mike was referring to is if we see a close below the 2019 close, we'll just use that, or the 2019 high. I'll take either. Or really, what we're really looking at is if we see a close below this year's open. This year's open on the Dow, we're at 32.66 right now. This year's open was 28.638. So it's it's about I don't know, is that 1,400 point move or something like that to the downside? Hey, Mike, we're about to go to a hard break here, so I'm going to ask you if you could hold on through this, and we'll go back. We'll take a look at the Dow. We'll try to answer any and every question that you have. But first, before we do that, thank you so kindly for your nice compliments. I really appreciate it. We'll be right back with Mike in Ormond Beach. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're on the line here with Mike in Ormond Beach. Just take a look at the markets in general. We're looking at the Dow. So when we take a look at the annual chart for the Dow, this is going to be bar number 9 of a TD9 count. And we know that on bar number 8, 9, or the bar following 9, that's when the high of the pattern can be. It turns out that back in the 1999, the 2000 run on an annual basis, it was the bar following bar number 9 that identified that high, and then we had your typical knee-jerk 3-bar reaction pullback out there. So where are we at with regard to this year? Well, if this year's close is below the open, then we would have a key reversal bar. And a key reversal bar is kind of like you had mentioned, you were thankful for the learning bullish and bearish reversal candles. Well, that would be a key reversal would be, in this case here, because price is moving higher, this would be a key reversal bar and say, okay, maybe we're about to head lower. The cool thing about TD9 count pattern is this. Whatever this high ends up being in 2020, if price begins trading above that in 2021, Mike, then that's going to be an indication to us. That'd be the first indication to us that 2021 could be an up year.
Right.
Okay, and so that's really the cool thing about this pattern out here. Now, that's taking a look at the yearly time frame. So what can we take a look at that says, hey, we've got to be really cautious about the breakout, about calling the Dow in a breakout pattern. Granted, priced in dollars, we're near a new all-time high. We're close to it. We're trading at 32.74. And on this chart here, Mike, this is the one that should give all of us pause. And the reason is, and I want to just take a look at the yellow arrows up at the top of the screen. They're identifying, well, the Dow priced in euros, you're seeing the all-time high. That was in the first quarter of this year. You're seeing the same thing priced in yen, the same thing priced in pounds. In other words, only the Dow priced in dollars, U.S. dollars, has taken out that prior high. And this is the same pattern that was present at the 2007 top out here. Back in 2007, the Dow priced in euros never made it up to the high in 2000. That wasn't the case in terms of yen, but it was the same case in terms of pounds. In other words, we didn't have traders across the globe that were saying, this is a breakout party and I want to be in it. And so we have that same divergence that is in play and says caution. Now, that caution signal would come down greatly, and I don't have the updated chart to share with you or set of tables right now, if there was a global flow of capital that was coming into the U.S. What I can share with you is it isn't, not yet. It hasn't established itself as doing so. But if we did see that, and we can, because 2021 could get even more chaotic and crazier in the markets out there. And that craziness could be much in the way it could form overseas. And then what's that global flow of capital going to do? And if that global flow of capital does hit the shores of the U.S. and price is trading above the 2020 highs out there, in other words, the TD9 breakout level saying, okay, it may be the year following, then we should see a run-up into 2022. And if it's the global flow of capital that's coming here, it could be a substantial run-up. We're at 30,000 now, 40, 50, 60,000 easily could be done. Are we there yet? Can we make that call yet? And my intuition and the signals say we cannot. We cannot make that call yet because the Dow priced in euros, yen, and pounds has not proven itself to us that there is a breakout. The true definition of a breakout is a global breakout. That's where price is trading higher and above resistance in all major currencies. So that's the best that I've got, Mike.
Yeah. And Steve, if we do exceed, let's say we do go up higher next year, then that would be a TD10 on an annual basis. And then, correct me if I'm wrong, but then the next place it would usually go to is a 13. Is that correct?
No, not necessarily. So the 13 is then you're also dealing with a little bit of a different counting mechanism than we are with the TD9 count pattern. But then you're talking about the TD sequential. So that's a whole different animal, and it is much more complicated to to describe and to talk about, and the patterns are they're much fewer. You see many fewer, because then we'd have to talk about really TD sequential and TD combo. The TD standing for Tom DeMark out there, which we can. Right. But because I had both programmed on my system, I don't have it on the current tools that we're taking a look at because of some upgrades that I did. But what I can absolutely share with you is the TD9s provide us with a ton more data. And it's much more frequently, and it can be used. And so you in understanding those breakout and breakdown levels, I'm not even sure. I'm sure he does. That Tom DeMark hasn't made a gigantic deal about it, the TD9 count, but maybe he's just keeping that under his vest. We here at TFNN, we know otherwise. We watch price come back to those breakout levels, and I'm always amazed. Well, I'm not amazed anymore, but as an example. Here, if we take a look at this morning, what went on in the markets this morning? Oh, come on. Work with me here. There we go. And it's in the NQ. The NQ is the one that was the weakest index this morning. Still is, I assume. But if we take, I don't know why this mouse isn't working. Let me try to expand this chart out without deleting it. Good Lord. Well, I don't know why I'm having these trouble here, and my apology, Mike. But what I can share with you is that on the NQ, if I could ever get this program, that what price did this morning, here we're going to get it up right now, is price pulled right back to where it should have, which was its TD9 breakdown level, and that's at 12,659.75. And it hit that, and it bounced right off of it. Right now, we're just consolidating sideways. So I'm not saying don't learn sequential or combo. It's just you don't see it as often. Right. And I've been trying to learn the TD9. I do try to pay attention to it, and I do my counts manually when I can. Another question is, are there any charting sites like Thinkorswim that do offer the TD? So Mr. Bill in our Tiger's Den, and he can put in the name of that tool if you would be kind enough, Bill. Mr. Bill, I believe that the Thinkorswim application has a tool that does that or does something similar to that. It won't draw in the support and resistance lines. It's called Sequence Counter. Thank you, Bill. So it's called Sequence Counter in Thinkorswim. So you can take a look at that. If you get that up and running, you can compare that to some of my charts to see if it's doing the right things. I know Mr. Bill uses that, though. Awesome. Well, thanks again, Steve, for all the great education, and I want to wish you and all the technicians at TFNN a great Christmas and Happy New Year. And thank you. The education that we get, it's unbelievable, and it's really it helps me a lot. So thanks, and talk to you next time. Perfect. You bet. Thanks so much for calling. That was Mike in Ormond Beach. When we get back from this break, I believe we're going to go out to Ray, who I think is in Sarasota. And we're going to take a look at Kamiko, I believe, CCJ. Steve Rhodes with TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins, too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And for those of you using the Thinkorswim application out here, a little piece of helpful advice coming in from Mr. Bill in our Tiger's Den, and he says in the tool when you pull it up for the array, what you want to do is you want to set array period set to 1, formation period set to 9. If you set the array period to 1, the formation period set to 9, you'll get the TD9 count. Otherwise, Mr. Bill is saying you get the TD sequential or the TD combo count out there. So I hope that helps each of you out. Let's go out to Fort Collins and speak with Mark. Mark, thanks for calling. Thanks for holding. How are you today?
Good, Steve. How are you? Happy almost holidays to everybody.
Oh, my goodness. I think we're on maybe a high. Maybe not. No sound. Oh, my gosh. I'm back. Okay, great. Is Mark, by any chance, is Mark on the line?
Can you hear me?
Charts would be good.
I can hear you.
Yeah, Mark, thank you. Okay. So, yeah, I don't know what happened. Hopefully we're through the meteor shower. And so natural gas is what forget about the personal question. Natural gas is what you called about. Let me just stick to this for the moment. How can I help you best?
So I'm a subscriber.
Yes.
I got in originally around 9:30 and
Yes.
got out around 9:70.
Okay.
I missed the little extra run-up that you got out of that. And I'm contemplating a move back into the position. Sometimes I play the options. That's what I did last time, and it was a nice little run. wondering what your thoughts are, if there's a place to dive back in.
So potentially, are you able to see the charts on Tiger TV?
I am.
Okay. So right now, where natural gas is flipping from January to February. So there's going to be your two left panels on the bottom left-hand portion of the screen. So we know that there were TD9 count pattern that formed yesterday, and prices pulled back to its first level of support. And that first level of support is the top of the profile. So that's old resistance that never really got tested as resistance, so to speak. I don't know if it acts as support or not. Respectively, those values are 2.556 and 2.568 for each of those contracts. So to first answer your question, are we potentially at a area that could be the C point of an A to B equals CD to the upside? The answer is yes. If price were to close below those levels, in other words, get back inside the profile, then that suggests that price might pull all the way back down to the bottom, which would be 243 and 245 respectively. So because you're in front of your screens and you manage your trade, you most certainly could enter another trade. But if you see it close below that level, probably exit, take a small loss, and wait for a better setup. What would be a better setup? The reason why I would be just hesitant, but prices pull back to support, is what I like to see when price pulls back to support on a larger time frame is bottoming signals on the shorter time frames, and we just don't have those. Here is a 15-minute chart. Now, this is of the natural gas contract, not of UNG. And here on a 15-minute time frame, no bottoming signal, not even an A to B equals CD to the downside that's completed, and price remains below that oscillator unchanged line. So I'd say price would have to close above 260, maybe make it 262 even. A close above that would then be your signal, that the support held on the daily time frame. And even though we don't have a bottoming pattern in the 15-minute time frame, what we did get was a close back above the top of a profile, and that can suggest a change in trend. The 30-minute time frame does not have a bottoming pattern in it. And so this is where you have a little bit of caution. The 60-minute pattern does have a TD9 count. So you could be using that as your gauge for your short-term time frame to get back into the trade. And then you would want to make sure that you don't see it close below 2.566. Are those parameters clear?
Yeah, that's great. I appreciate it. And I was do you have time for one more quick question?
Oh, yeah, you bet. You're on the line. It's yours. The floor is yours.
All right. So I'm mostly long, and everything's going peachy. But I have found in the past that whenever you feel uncomfortable and full of money, you get hammered. So I'm wondering if you would tell me, if you were going to play a hedge on the market, what do you think? What indice do you think is most likely topping here? Or would you play a hedge using the VIX or a UVXY?
Which indice or which sector? Which is it that you prefer to?
Well, I mean, I would typically play some puts on one of the indices or one of the triple shorts or something like that, or buy some UVXY or something like that as a hedge. Just wondering if you had a preference for what you think has what's topping here or bottoming here as far as the VIX goes or anything like that.
So this happens to be the one day that you asked me a question like that. I normally have my set of charts up that have all of the daily indices, and I can quickly flip to that set of worksheets and then be able to easily answer that question. And I didn't get that loaded today, so I can't do that. I can't do that easily. But here's what I was going to say. Do you have an instinct of what you think? And then let's take a look at that together.
I was thinking the IWM has completed another ABC up based on what I was looking at around the 200 level, and it's kind of touching the top of a trend line, the rising trend line. So I was thinking maybe that would be a good place for a little protection, either buying the calls on the TZA or buying some puts on the IWM. But maybe let's look at that.
Perfect. So that is a great place to start. I'm glad that we did this. So let's do a couple of things. First, here are the 4 time frames for the Russell 2000. Prices above the top of its daily, above the top of its weekly, above the top of its monthly. I don't have enough data to know whether it's above the top of its quarterly. So it is in breakout mode from a profile standpoint. Right now, even though the quarter hasn't ended, we're seeing that prices above the 1.272 expansion of its last set of major swing points. That was at 1977. So from this set of charts here, this suggests that the Russell 2000 equity futures contract is going to go target 2063, another 60 points higher. Mark, stay on through this break if you would, but that's the initial premise right now. I'll pull up my other charts. We'll go take a look at them, and we'll try to figure out what the Russell 2000 is doing, or where would be the first signal we would get of a change in trend. Steve Rhodes with TFNN with Mark and Fort Collins. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with Mark and Fort Collins. We're taking a look at the Russell 2000. So the very first place that I want to start with the Russell 2000, or the next place that I want to go with you, Mark, is take a look at the daily time frame chart. And 2 days ago, what formed was a bearish engulfing candle, and that confirmed a sell the D point. That confirmed the end of the A to B equals CD, or so we thought it did. Now, what price also did on that day is it pulled back, it tested and rejected support, which was the bottom of a brand new bullish structured profile. Today, price is trading above the top of that bearish engulfing candle, with the high of that candles at 1992.20. Mark, today it closed above that, negates that pattern, and says we don't have a topping pattern in the daily time frame. Today will become bar number 7 of a TD9 count. That says the earliest top that we could see would be tomorrow, Monday, or Tuesday with that pattern, and you couldn't get a confirmation on that until Monday, I think Monday. Okay, so that says no top just yet. What would be the first price point that price would need to get below to say, you know what, this could be a change in trend? For me, that is always being able to break through key levels of support. And on the short-term time frame, the key levels of support would really be those breakout levels, and these are the TD9 breakout levels. Mark, that level is 1990.60. The 30-minute time frame chart suggests that we should see price get down to test the 1992.40 to 1990.60 level. And I'm saying that because on a 30-minute basis, this does have a TD9 count top, and it's inside a bearish structured profile. Look, if price takes out the current high on this 30-minute basis, which is 2007.10, basically, that's telling you about a strong momentum move to the upside, and you most definitely would not want to be short. But if price could close below 1990.60, then that might trigger your hedge, so to speak. Does that make sense?
Yep, sure does.
Perfect. Because we were out of time, but if it didn't, well, we would have picked up that conversation elsewhere. So, Mark, thanks so much for calling in. Have a Merry Christmas, Happy Holidays. We'll look forward to speaking to you again soon, which would have to be sometime next week. Folks, have a Merry Christmas. Thanks so much for being here. Thanks for all the great calls today and everything else. Be safe out there, and we'll look forward to seeing you on Monday. Take care.